Great afternoon, everyone. Great afternoon, everyone. Today is Friday, which means we have the weekend ahead of us. We have the weekend ahead of us. Today, I'm not going to make this video too busy. But a lot of times when we're looking at the market, the number one thing we all want to know is where in the hell is this thing going? Okay, where's our bias at? And we can do this by taking retail theory and turning it over on its side, right? So when I was starting off, I went, when I started getting interested in day trading, I went to Barnes and Nobles and I got the first day trading book that I could find. I threw it away, but it was along the lines of Day Trading 101. And one of the things that they would always teach is that, and I put up this little diagram right here, this little figure. This, when you had double bottoms, this area was support and price would bounce off. Where if you had double tops, this area was resistance and it comes down. So if price would ever come back up, let's just say I'm drawing with this line. So if price would ever come up to this area right here, these double tops, we can expect that to be resistance for price to go lower. And I did that. I tried that theory for the longest time. And I wondered why price did, in fact, not go down, but instead just went higher. And it's with the theories of ICT, it is because there's orders, stop orders, and buy orders up there for people that went short because they read the same book that I read when it came to retail double tops and double bottoms. I mean, you can go to Barnes and Nobles right now, find the first trading book you can ever find. The first thing that you see is they're going to say double bottoms, double tops, plain and simple. And the reality of that is it's just an area for smart money to take those stops out and then drop the market. And I'll show you a little bit about that. But I'm gonna keep that right there. Um just for show and tell here. But okay, so today here's the market. It's about 8:10 a.m. Okay. We're moving along here. We're moving along. Okay. A lot of this stuff is going to be hindsight, yet it's important to know, important just kind of to see and get the basic idea, right? So, okay, we're on the 5 minute, which is a pretty busy, not busy at like 1 minute or 30 minute or 30 second, but it's a pretty busy area for liquidity. Now, if I was ever going to look at this on a higher time frame, 15 minute is phenomenal. Are you going to get, you know, one of those big setups every single time on the 15 every day? Well, maybe, but it's 15 minutes. A bar takes 15 minutes. So, you get 4 bars in an hour. So you definitely have to have patience for that. But when I read this book, this just retail logic, double bottoms. So what right here, see this here, I'll zoom in. You see this little guy and you see that little guy, relative equal lows right here. In my eye, that should be a resistance. And let's see what happens here when it comes down to that area of resistance. No, I'm sorry, support. Support. So price should be supporting that, right? Let's look. So we come down. Look what it does. It supports that price. So now, guess what everybody's doing? Everybody that read the same book right here, double bottoms. What's this right here? Double bottoms, actually triple bottoms. I'll just circle them. 1, 2, 3. There is orders pumped up by retail money. right in this area. And it does one of these, gives you a green candle. Now everybody's going in, right? Okay. Where do they put their stop? Where do they put their stop loss? If this is support, if this price is supporting, where am I going to put my stop loss? I'm going to put my stop loss right here underneath support, and I'm going to do that red. Okay? That's where I'm going to have it. But now I said in the beginning of the movie or video, I want to flip retail logic. And I actually want to attack the sell stops. Smart money. I'm thinking like more of like a bank, you know, Goldman Sachs, Merrill Lynch, them kind of guys. Because now their orders are so large. Like they're not like one or two or three contracts. These guys are hammering it. But they have to do these types of things in order to generate sell stops to fill their orders. Okay, because their orders are so large. I mean, they can't just get in right here. So they have to generate it. Okay. So now we have another fake out here. Okay. Retail's thinking we're all going long. Coming down. Oh. And then it bounced up. Okay. Maybe. Boom. That's all you need to know right there. This area, you don't see it, but smart money got in right here. Right there. And I mean, we're talking these algorithms or these trading like bots that they have is putting in order after order after order, blah, 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 buying all this up. Now you're thinking to yourself, this is going lower, or well, or probably just got stopped out, right? But really, that's smart money getting in. Okay, that's smart money getting in. I thought this was supposed to be support. Turns out not. No, it's not support. It's an area for smart money to take your stop loss out and then turn it, right? And then turn it. All right. So when we see these types of things, when we draw our sell side liquidity, when it's the sell stops, we put it right underneath that. We draw that line. It comes up or it comes down. It rejects. And then what's it do? It pushes up. Now, what's it do when it pushes up? It displaces. So what we could do is we could do one of these. We could do a fair value gap right here. It will annotate that. That's a fair value gap. See how it's displacing? It's going straight up. So in order to have a fair value, it has to offer selling too, right? This is all buying. Now we're expecting the price to come down to price in for this the selling side for a fair value. That's why it's called a fair value gap, right? Comes up. What else do we have here? We have another fair value gap right here. Okay. Those are all going to be key areas that we need to like identify because we already know that we just took out sell side. We already know that. So now we're keeping our eyes located. Here's those double tops right here. Okay. Got smoked. Coming up. Okay. I want to show you something else too. And I'll leave those little fair value gaps there too. Another thing to observe as well is this guy right here. It's the same thing, just flipped it around, right? So you see, this would be buy side liquidity. Okay. When we came up to this wick right here, this wick right here. Well, let me redo that. Right here, price came up. It produced a what? A double top. Doesn't it look the same right here? Doesn't that look the same as right here? Pushed up, boom, boom. Doesn't that look the same? So what's retail Retail's going to use that area. What did smart money do? They're generating liquidity for their large orders. Guys, these ain't no rinky dinks. And I can't emphasize that enough. These are orders, contracts, son contracts. They're going to generate that. So here's what they did. You ready? This is going to freak you out. Okay. They generated double bottoms right here, double bottoms for everybody to put their sell stops in. What did smart money do? They bought right here. And where did they sell to? They sold to these guys right here, thinking that these double tops was going to be support. They got in right here and sold right there. Okay? That's huge. That's huge. So now, whenever we look at the market, we do not look at this and trade like this. We don't get in those orders. When we come down and we took out sell side, when we took out these double lows right here, and then we pushed up, and keep in mind this is the 1 minute time frame. Okay, I'll tell you what I can do here. Let's back this up. Let's go right here, okay. And then we'll just go the 1 minute, okay. So when you see that on the 5 minute, come down to the 1 minute, okay, a lower time frame, and you'll see this guy right here. I don't know why I just deleted that. Let's look at this right here. You see that? So we took out sell side, okay? We pushed up, displaced higher, came into what? A fair value gap right there. You can buy right here at the consequent encroachment, or you can scale in. Now, this is kind of a different video, but this is scaling in 25% of the fair value right here, 50% and 75%. So you could put an order right, you know, right there, and right there. Okay. Boom, boom, boom. You could fill your orders right there. Now, where are we going to? So now we're in line with smart money. We're in line with Goldman Sachs and all those guys. We bought right here. Now our sell stop is right here. Okay. Our sell stop is right here now because we're in with smart money, right? Because we have observed that that was a double top. Okay. Or double bottom right over here. Took your order, displaced higher. Once we see that, enter in on the fair value gap. Where are we going? We want to aim towards this area, these double tops. That is an area that we're going to be targeting. It's going to be the draw on liquidity. It's going to be the draw. It's going to pull it. Okay. It's going to pull it. Okay. And this is another video too, but just for fun, I'm going to say, right here is a market structure shift. Now that's it. Once you see the sell side being taken out, you pretty much already know it's going to go higher. I mean, when it displaces like that, you've been expecting bullish pricing. You have market structure shift, so you were making lower lows. Now you're making a higher high, and then boom, it broke that market structure shift. Okay. Now what are we targeting to? The same thing. We're just reversing it now. We're going right up to buy side. Okay. Look what it's doing again. Did you see that right there? You see that little guy right there? It was making you think, maybe maybe this thing is right. That's what the market does. It fakes you out. Maybe they were right on these double tops. Right here and right here. Retail went short here. What they do, put the stop loss right here, up top here, and up top here. Now, what did smart money do? They sold their orders right there. Okay. They sold their orders right there. So if we get on the 5 minute, we can see that. Okay. So that's how you're going to use your bias. A lot of times ICT talks about, if we're bullish or if we're bearish. And I didn't understand that for the longest time. I was like, if we're bullish, if I knew what we were doing, well, that'd be different. But we're bullish because we see double tops that have not been taken out yet. We're bearish if we see double tops, triple bottoms right here that have not been smoked yet. Okay. So this is a very extremely, I don't know, I guess I'm going to say simple, but overcomplicated. And it doesn't have to be. When you see sell side being taken out after you see these little double bottoms, as retail would say that's support, you want to start aiming towards that. Are we going to be buying where smart money is going to be buying? Absolutely not. No, we don't have that type of drawdown to be um, buying right here, because smart money could have easily brought this lower and then kept going a little bit lower. So they could have accumulated in a position right here, but then they're like really wanting to get their orders going and accumulate more right here. So we never want to predict lows ever. Okay. We want to see that the lows got taken out, check one, and then, hop on your lower time frame. Is there displacement? Yes. If you have enough confidence to enter in on this first fair value gap and then put your stop loss right there, absolutely. If you want to wait and have a market structure shift right here on this, so here, I'll just draw this line. Okay. If you want to wait and have a market structure shift right here, what's the next candle? Boom. So we already know it's market structure shift. I'm going to get rid of that. Okay. Right there. Where's the fair value gap? Right here. If you can do that as well, that is absolutely 110% fine. You can do that. Okay. Comes in, fair value gap right here. Price shoots up. Where are we aiming towards? Aiming towards buy side liquidity. And it hit it perfect. Today was a wonderful, wonderful example of just like the video says, we're going to sell side, we're going to buy side. That's how the market moves. And I encourage you to backtest it. I encourage you to backtest it. It's phenomenal. When you see the market move like this, and it work out in your favor. It's a wonderful feeling, because for the longest time, I'm making this video. There was a big struggle. There was a big struggle in all this, because when I read those books, I was just, the authors were the the Wall Street, kingpins. I mean, these guys were some serious people. And when they were saying that double bottoms was support, I believed it and I bought into that. And then I got stopped out every time. And I'm wondering, how come they're stopping me out right here when I did get in right here, and right here, right? Just keep in mind, double bottoms is support. That's what I was talking. And then the price moves. That's why, because it had to generate there. And you can't be mad at that, though. You can't be mad at that. They took that smart money, Merrill Lynch, all these big banks, Bank of America, whatever. They have to do that. They have to. They're not you and I. They're not buying one micro contract. They're not buying one mini. They're buying hundreds upon hundreds and thousands. I mean, dude, you're talking big money. You're talking millions, millions, and millions, and millions. They have to do these types of things. But now we know. But now we know. Okay. So as long as we keep having double bottoms, we're going to be making money. Okay. As long as we have double tops, we're going to be making money. We're going to buy their stops. We're going to sell to the people that went short up here, thinking that that was resistance. Okay, so that's why it's important to observe that and to get away from retail logic. Get away from retail logic and start doing the ICT method. You got to start doing it. I'm telling you, when I first started the ICT stuff, I'm not perfect at it. No, absolutely not. No. But when you simplify ICT's concept, it really starts making sense and it feels good because you feel, you know what? You feel like you know more than the average guy. And you know what? You do. You do. And that's why 90, what is it, 91% of day traders fail. It's because of this thing right here, this little diagram, this thing that was taught in every single retail logic book. Double bottom, so it's going to be support. I got stopped out. You'll have a time to short up here. Why do I keep getting stopped out? I keep getting stopped out. I want to short right here because that's resistance. Why do I keep getting stopped out? Okay. So something to really think about. It's anyways, I won't rant and rave anymore, but look for the stops. Look for those double bottoms. Look for those double tops. When price gets taken, look for a fair value gap in the opposite direction. Or if you want to wait, look for a market structure shift in the opposite direction. The same thing that happened with the 1 minute. Get a sweep in liquidity, move up right here. You can also do that well, and there's nothing wrong with that at all. There's nothing wrong waiting on market structure shifts. No. Matter of fact, you'll probably be, you want to talk about checking all the boxes. Oh, yeah. Get that market structure shift. Where's fair value gap? Right up, right in there. Perfect. Perfect. All day long. Are you in right here? No. Are you in right here? Sure. Sure. You know? So I hope this video helps, guys. If it was confusing, just know that double tops and double bottoms are not, they're not true support and resistance, okay? So we're going to take this and we're going to shove it in the garbage can. And that's what you should do as well. All right. So thank you guys. And I hope you have a wonderful weekend. Wonderful weekend. I think the next video I'm going to do is, I don't know for sure, but I want to do it on the micros, ICT macros. I don't know for sure, but I'll have something planned in. I'll have something planned for you guys. But thank you so much. And have a great weekend and a safe weekend.